Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The U.S. Treasury says it's been hacked by a Chinese state-sponsored actor through a third-party software vendor. Syria reportedly appoints the country's first female governor to head its central bank. She faces the challenge of enabling growth while stabilizing the currency and foreign exchange reserves. And South Korea issues an arrest warrant for impeached President Yoon, which his lawyers claim is illegal. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai in for Jumana Bersachi. So here we are, guys, the final trading day of 2024. And let me tell you, it looks like we are going to be finishing the year with stocks under pressure. You can see behind me, there's clearly a lot of red on the screen. S&P 500 futures, NASDAQ futures, both pointing lower this morning after further losses on Wall Street yesterday, yet again led by big tech. The S&P 500 was down for a third straight session, and we are now actually on course to see the S&P have its worst month since April. Having said all of that, though, we have to remember that the S&P 500 is heading for an annual gain of about 25%. So really what we are talking about here are minute losses for a benchmark that has come a long way. So perhaps what we're seeing is traders just taking stock of where we have gone over the course of 2024. What's also interesting is that you have the dollar and gold here, two asset classes that have done very well over the course of 2024. And even those two things are coming under weakness. Still, we are on course to see the best performance for the dollar since 2015, and gold is heading for an annual increase of 26%. Now, let's talk about the Treasuries market, because yesterday we actually saw a reprieve in the Treasury sell-off, so much so that we had yields come down across the entirety of the curve. But still, you could see that the 5-year yields, the 10-year yields, they continue to trade at very elevated levels. We are trading near the highest levels of some of the highest levels that we've seen over the course of 2024. The U.S. 10-year yield has still come up about 30 basis points just over the course of December alone. Much of this, of course, on the back of the expectations for fewer rate cuts in 2025 and also for fiscal policy risk. So that is your markets check. And of course, that's not all, because we have to get over to Asia and see what's happening there. Let's check in on all that's going on with Avril Hong, who's standing by in our Singapore studio for us. So Avril, what are you watching there? Is it as red over there as it is here?
Well, Christine, to be honest, not much is happening in this part of the world because, you know, Japan, South Korean markets, they're already shut. We have New Zealand, Australia, Singapore, you know, up and running, but shortened trading days. It's a time of thin liquidity. If anything, we're seeing those declines in Asia stocks as the Wall Street handover, as you know, was pretty weak. But I wanted to focus on what we're seeing in China, because today we did get some activity indicators, and the manufacturing PMI showed another month of expansion, so more or less in line with expectations. What really surprised to the upside was the non-manufacturing PMI. So this was helped along by services, construction activity, adding to signs of a stabilization in the Chinese economy. But if you look at Chinese stocks today, we're actually seeing them struggling for convincing gains. Clearly, investors want to see more in the way of stimulus, not helping as well. I think sentiment is China's relations and the friction with the U.S. Christine?
All right, Avril, thanks so much for all of that. That's Avril Hong in our Singapore studio. Well, the U.S. Treasury says it's been hacked by a Chinese state-sponsored actor through a third-party software vendor. A letter to Congress seen by Bloomberg describes the hack as a, quote, major cybersecurity incident. It's the latest in a string of recent breaches that have affected U.S. telecommunications systems. Now, multiple media reports say Syria will appoint Maysa Sabrin as the new central bank governor. She would become the first woman to ever run the bank. Sabrin previously served as the first deputy governor under the fallen Assad regime. The central bank now faces the enormous challenge of stabilizing Syria's currency and foreign exchange and reserves, while also setting policies to enable growth. Meanwhile, more foreign delegations are visiting Syria in a bid to restore ties following the collapse of Assad's regime. A delegation led by Kiev's foreign policy and agriculture chiefs is the latest to visit Damascus. Ukraine's President Volodymyr Zelensky says the first batch of 500 tons of Ukrainian wheat flour is set to reach Syria today, with more shipments to follow. Let's bring in Henry Meyer, Bloomberg's senior reporter. So, Henry, great to have you with us this morning. Talk to us about what we've heard from Ukraine and its efforts in Syria and its outreach in Syria.
Yes, good morning, Christine. I mean, it's interesting timing, isn't it? Right at a moment when Russia is engaged in very delicate negotiations with the new authorities in Damascus to try and keep its 2 military bases, which, of course, it had under the Assad regime. Here we have this delegation coming from Ukraine. And, you know, in the context of the war in Ukraine with Russia, it's very interesting, sort of diplomatic rivalry. You know, I mean, I think that the Syrian authorities now are taking a very long, hard look at their relationship with Russia. The new leader, Ahmad Sharia, gave an interview to Al Arabiya just recently, and he said that Russia is a great country and they have strategic ties with Syria, but he was non-committal about whether he would allow Russia to keep its military bases. So we'll have to see, you know, what the outcome of that will be.
Yeah, and there were some other important developments overnight. Russia and Ukraine have swapped prisoners. This happened yesterday, and it's reported to be one of the biggest prisoner swaps that we've seen since the war began. What's the story there?
Yes, well, I mean, this is a part of continuing efforts by the United Arab Emirates. They've been mediating, you know, dozens of these prisoner swaps over the course of the war. And yes, of course, this is a very important, you know, humanitarian role that the UAE is playing. As you said, it's one of the largest prisoner swaps since the war began. And, you know, no doubt those efforts will continue.
There was also news out of the U.S. that there was an aid package, perhaps one of the final of the Biden administration, approved for Ukraine. Quickly, can you just tell us about the package and how significant it is for Ukraine?
Well, I mean, in terms of size, it's you know, obviously significant. It's around $5 billion. But, you know, what we're seeing now is the final winding down of the aid that's been provided under the Biden administration. And we're sort of entering into uncharted waters, really. Trump takes office, you know, later in next month. And we're going to see what his policy is. You know, he said on the one hand, he's willing to increase support if it helps push Russia into a deal, but he's also willing to decrease it. So I think for, you know, Ukraine, obviously they will be looking at, you know, the twilight of the Biden administration with some apprehension, I would say, as they look into the, you know, the new situation with Trump.
Thanks so much, Henry. That's Henry Meyer, Bloomberg's senior reporter. Well, to Saudi Arabia now, the investment minister there says he plans to quadruple foreign investment into the kingdom by 2030. Khaled Al-Falih spoke to Bloomberg in October on the sidelines of the Future Investment Initiative conference in Riyadh.
Today, the kingdom gets $26 billion, which is the 96 billion riyals I was talking about. So, ahead of target, the national investment strategy assumed that we will have a steep but manageable climb towards 2030, where the target is about $100 billion in 2030. So today we're about 4x, if you normalize for fluctuation, we're about 4x where we were before the vision started. And we need to quadruple that still to get to our target 2030. Ahead of the annual target, but not nearly where we want to be at 2030. But the reason I feel optimistic is that all the leading indicators are pointing upwards. All lights are flashing green. Investor licenses are at an all-time high. We have 10 times the international investors we had before the vision. And they are forecasting deployment of significant amount of capital. All the sectors are attracting a lot of attention. Our capital markets are growing well. We're issuing a lot of IPOs, so international investors are seeing that they have an exit, they can monetize.
I just got off a panel now talking about the state of the global economy, and one of the big themes that is coming up is this concept of geoeconomic fragmentation, further trade barriers being put up around the world, talk of further tariffs should President Trump return to the White House. How do do you account for the possibility of further trade barriers being introduced in the future, and obviously the invariable impact that that's going to have on FDI flows internationally?
No, I think global trade will continue in a big way, but global supply chains and who you trade with will shift somewhat, but I wouldn't over-dramatize it. Because the interdependency between people on the planet, and we've just crossed 8 billion people, everybody needs to be fed. We experimented a little bit during COVID and the Russia-Ukraine war with the disruptions in global supply chain, and nobody liked it. People couldn't get their food. Manufacturing in some countries stopped because parts were not coming. So I think we're coming to the reality that we need more resilience and more trade, not less. I think there is a reconfiguring of global supply chain and therefore global trade to regionalize some of it, certainly to green a lot of it and to decarbonize, and to introduce technology across the board, and to go to regions that are growing, where there is a population that is vibrant, well-educated, and there are companies that are invest, and the business environment is transparent, pro-private sector. All of those factors, Jumana, are right here in the kingdom.
That was Khaled Al-Falih, Saudi investment minister, who spoke to us at FII in Riyadh. Now, for a look at some of the other stories that we're following this morning, U.S. stock markets will close on January 9th to observe a national day of mourning for former President Jimmy Carter. The closures are part of a long-standing American tradition in which financial institutions halt operations following the death of a president. Carter died on December 29th at the age of 100 and was the longest-living U.S. president in history. The Tel Aviv Stock Exchange is planning to move its trading days to Monday to Friday from its current operating week of Sunday through Thursday. The change will happen in early 2026, and trading will end at 2 p.m. on Fridays in order to allow for Sabbath observance. The finance minister says it will align Israel with other global capital markets and strengthen its connection to the world. Still ahead, hear why Capital.com says Japanese equities are best positioned to benefit from Trump's incoming administration. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Berg in Dubai. Asian shares are struggling for direction on the last trading day of 2024 after a weak showing on Wall Street, with some markets already shut and others closing early. Let's bring in Kyle Rodda, Senior Market Analyst at Capital.com. So, Kyle, thanks for joining us, especially on New Year's Eve, so late there in Australia. Let's talk about equity market performance, and specifically I want to start on the U.S. because we have seen stocks coming under a lot of pressure. When I look at some of your insights, you say that you are cautious and slightly bearish on U.S. equities. So what do you make of the pullback that we've seen over the last week or so?
Thanks for having me. It's always tempting to perhaps find signal in noise, and maybe this is what we're seeing over the last few days is really just symptomatic of thin markets and noisy trading. However, it's very, very tempting, it has to be said, to sort of think that maybe what we have seen in terms of the pullback in equities, the rise in yields over the last few days, and some of this heat coming out of the market being potentially symptomatic of something to come into 2025. What do I mean by that? Well, effectively, at the moment, we have valuations very rich, as rich as they've been taking out of the COVID period, arguably since the dot-com bubble. And we've got a lot of traders on the one side of the boat, so to speak, in terms of positioning. And what I would probably describe as complacency, certainly an excess bullishness in the market, which makes you think whether that all of the good news that is, coming down the pipeline in terms of, stronger earnings potentially from, Trump tax cuts and deregulation and, this resilient growth that we are seeing in the US economy is more or less discounted in the prices. And what we aren't seeing at the moment is the potential re-rating of bonds that may need to occur because of those same factors, which at different stages over the last couple of weeks have appeared to play out potentially compress multiples and risks valuations normalizing to start off the new year and sort of sparking a level of outflow of equities to sort of reposition the market closer to fair value. So for me, I'm fairly cautious, especially considering we've seen 2 years now with potentially 25% returns, nominal returns for the S&P 500, and a lot of the narrative of the market being so positive that maybe we're due for a little bit of a pullback in US equities.
What about over in your side of the world? You are based in Australia, and that's where you're speaking to us from today. What markets do you think in Asia are best suited to either outperform, underperform? What is front of mind for you?
Well, I think Japanese equities actually look rather attractive. First of all, going back to almost the first question, if we do see a little bit of a pullback on Wall Street and the subsequent tightening of financial conditions that will come from higher yields and an adjustment in equity prices, there'll be no part of the world that will be sort of exempt from that, and we'll see a revaluation everywhere. However, when you do look at areas that offer potential value, especially in a world where we're seeing these tax cuts coming through the United States, maybe some persistent strength in the US dollar, although I suspect that may moderate as well, and the new sort of world order under Trump 2.0, which looks far better organized and also far more predictable than the first Trump administration, where bilateral relations and this fairly zero-sum mentality to both trade, financial, economic and strategic relations kind of plays out, is that Japan looks reasonably attractive. We had obviously the big run up this year in prices because relatively speaking we had this reflation trade going on. The BOJ was reluctant to hike rates too aggressively to make sure that inflation expectations were anchored. We had a depreciating yen, which was fantastic for exporters, and obviously as well these corporate governance changes which sort of increased multiples and expectations of investment down the line. I feel though over the last couple of months there's been a moderation in the sentiment of Japanese assets. We've seen obviously the pullback. We've also seen policymakers there probably burn their fingers a little bit in terms of the rate hikes that have been implemented at different stages in the year, causing some market volatility, and therefore maybe just some moral hazard even being built in there that policymakers will be less inclined to slam the brakes on the economy at the risk of causing financial instability. So when you factor all those things in together, and the fact that compared to the start of the year, Japanese equities are far less in vogue. We've seen a bit of consolidation. It augurs well, I think, for the Nikkei to continue to push higher through 40,000, and that's perhaps the best place to get exposure in Asian markets in the next year.
What about FX? Because you talk about the yen there. We've obviously had a lot of dollar strength in the market. Do you think that the dollar continues to move from strength to strength as we have seen over the last 8 weeks since the election of Donald Trump?
Well, this is another situation a little bit like equities, where you're seeing sort of fundamentals competing with perhaps technicals, and which one actually wins out. The equity story is very much that the fundamentals look fantastic, but positioning and valuations and momentum are a little bit too stretched to the upside, and there may be some sort of revaluation required. There seems to be some stark similarities in what's happened with the US dollar recently in response to this Trump trade, or the election of Trump, and the expectations of tax cuts and tariffs and potentially a global economy that is weak, ex-United States, that, in 2016 we had this big run up in the dollar into the end of the year before things kind of, normalized a little bit, and we saw this kind of reversion to the mean for the greenback, and, that sort of led to a bit of a top, or a short-term top in the US dollar. It seems to be setting up in a fairly similar fashion, because we're seeing, again, this high level of bullishness in the US dollar, a lot of bullish sentiment in terms of the US dollar at the moment, because, the fundamentals clearly look strong for the dollar when you factor in the tax cuts and the tariffs. However, I suspect that, again, perhaps like 2016, these sort of technical factors of basically overbought conditions for the US dollar, may lead to a bit of a pullback as our traders reposition into the new year. If nothing else, the risk reward seems to be sort of better sort of to the downside because of those sort of stretched conditions. So I think that's potentially the way to play it. It makes the Japanese yen and some of those other low yielding G4 currencies that may benefit from a weaker backdrop looking a little bit more favourable. But that's sort of the way that sort of I see the positioning playing at the moment.
All right, Kyle, thanks so much for all those thoughts. That's Kyle Rodda, Senior Market Analyst at Capital.com. Well, coming up, impeached South Korean president's lawyer has called a warrant for his arrest is illegal. The latest on the political turmoil in Seoul next. This is Bloomberg. Lawyers for South Korea's impeached President Yoon Suk-yeol say a warrant issued for his arrest is illegal. The warrant came after Yoon repeatedly defied investigators' request to face questions over his martial law declaration earlier this month. Bloomberg's Bill Ferries is with us for more now. So, Bill, it's been a number of days since we've talked about the political strife that is going on in South Korea, just given attention has, rightfully so, been focused on the air accident earlier this week that led to fatalities. What is the latest in the impeachment of Yoon Suk-yeol?
Well, we're continue to be in uncharted territory politically. There has been an arrest warrant issued for President Yoon. It's not clear how much time investigators have to carry out that warrant, or if the president's officials will find a way to block that warrant from being carried out. Right now, South Korea is on its third leader this month, with the finance minister, acting President Choi, now in charge of South Korea and overseeing a lot of these multiple crises. But it remains to be seen sort of how this plays out. It could continue for months into next summer.
So what are the next steps? How is Choi managing the situation? He's wearing multiple different hats, isn't he?
He is. He still continues to be finance minister at a time with some rising economic challenges. Inflation picked up. The won is the worst performer among major currencies this month. He's officially overseeing this investigation into the Jeju air crash this weekend. And he's dealing with the political chaos that South Korea finds itself in with this arrest warrant for President Yoon. If that warrant is carried out, he would be the first president in office to be arrested in the country's history. So a huge number of issues, major issues on acting President Choi's plate right now. And we'll see how effectively he's able to carry all of that out in the days ahead.
Right, Bill, thanks so much for breaking that down for us. That's Bloomberg's Bill Ferries. Well, let's take a look at how markets are shaping up. We've been talking a lot about how there's a lot of weakness that has been coming through. And what we are seeing when we look at U.S. equity futures is definitely that the mood continues to be one of caution heading into the new year. There's a lot of red across that screen. Remember that we do get an early close of bond markets today, and many markets in Europe are also already shut just for the New Year holiday. So just something to keep on your radar that we're in thin trading. And coming up, Saudi Arabia's inflows of FDI slumped in the third quarter. We speak to Abdul Kadir Hussain, who is with Arqaam Capital. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. The U.S. Treasury says it's been hacked by a Chinese state-sponsored actor through a third-party software vendor. Syria reportedly appoints the country's first female governor to head its central bank. She faces the challenge of enabling growth while stabilizing the currency and foreign exchange reserves. And South Korea issues an arrest warrant for impeached President Yoon Suk-yeol, which his lawyers claim is illegal. It's just gone 8:30 a.m. across the Emirates. I'm Christine Burke in Dubai. Well, here we are, the final trading session of 2024, and it looks like we are heading for a finish in the red, at least on this final trading day. You can see S&P 500, NASDAQ futures both firmly in the red this morning. That's after we saw broad-based losses on Wall Street yesterday, once again led by big tech. I'm actually looking here at the Magnificent Seven stocks, and we saw a further decline of 1.35%. So the losses that we saw in big tech start last week did continue through in yesterday's trading session. If we look at the dollar and gold, those are also two assets that have been performing very, very well this year, and we are even seeing weakness there. Even considering that, though, the Bloomberg Dollar Spot Index is on course for a gain of more than 7% this year. That's on the course for the best year since 2015. And gold is up 26%. We have heard some comments out in the market that gold was one of the most surprising trades of 2024 for some market participants, just as the metal benefited from central bank buying, also from cuts in interest rates by the Fed, and also as geopolitics probably just led to some safe haven buying. Now let's flip this over and talk about another commodity that's been really hot this year, and that is cocoa. And the reason that we're putting this up is because we had a little bit of a pullback last week, but yesterday we saw futures jump as much as 14% in what was the biggest intraday move since May earlier this year. And that really comes on the back of concerns around production in West Africa. So one of the other commodities to keep on your radar as we head into 2025 and consider what commodities will be the top plays in the new year. Well, let's get back to this region and to talk about Saudi Arabia, because inflows of foreign direct investment slumped in the third quarter, in a sign the kingdom continues to face challenges in drawing external cash to back its economic overhaul. Official figures show FDI inflows dropped 8% quarter on quarter to 18 billion riyals in the 3 months through September. Abdul, Kadir Hussain is Managing Director for Fixed Income Asset Management at Arqaam Capital, and he joins us now on set. So, Hussain, good morning. It's really good to be here talking to you about Saudi. The FDI data yesterday, I have to say, it didn't come in that great. We saw a drop quarter on quarter, a drop year on year. And also, when you look at the first 9 months of 2024, FDI inflows have now only amounted to $14.5 billion. That's only half of the government's target for 2024. Why do you think that we're seeing anemic FDI, if you will?
Yeah, I mean, I think there are several factors, to be honest. I mean, obviously, the geopolitics in the region and some of the uncertainties around the region this year in 24 have been one of the factors. I think another factor is investment in Saudi has been driven primarily by the PIF and by the government, so it's very much a domestic-driven investment. And I think, you know, the foreigners have sort of taken a step back and wanted to wait and see how some of these large infrastructure and sort of structurally enhancing, economic structurally enhancing projects are gonna come through. And I think that's been one of the factors. And then the final factor, obviously, we have new investment rules coming in 25. Which are supposed to really improve the ease of doing business, the transparency of doing business, the regulatory requirements. And I think some of those business rules and some of those changes will have to really sort of take impact and kind of bed in to the economy before foreigners get really comfortable coming in larger amounts, which I think, you know, they will, because the economy is moving in the right direction, the size, the infrastructure is moving in the right direction. I think you just need time for some of these changes to take hold before you really start seeing confidence come back.
Yeah, and those investment reforms are due to take effect in early 2025, at least the last that we heard. And the government had said specifically, this is meant to cut bureaucratic red tape. This is meant to boost investor confidence. So I think it will come down to, as you said, time to allow that to play out. How important is FDI for Saudi Arabia at this point in time? The government has said FDI is not the end-all, be-all, but we know that they are in need of any external capital, really.
Right. Yeah. Well, I mean, it's going to get increasingly important because we're expecting now twin deficits in 2025. 2024, you pretty much had a break even on the current account balance. But, you know, we're looking at somewhere between 4 to 5% on the fiscal side and around 1.5% deficit on the current account side. And so obviously, if you start running twin deficits for an extended period of time, then you need sources of FX to come into the economy, and FDI is obviously going to be an important source. I mean, currently the buffers are pretty strong, and this is not an immediate need. But I think if things continue and if you continue to run twin deficits, then the importance of FDI is going to increase even more.
Yeah, and you speak about the twin deficits. We did see Saudi Arabia post its first current account deficit since 2021 for the third quarter. That data just came through on Sunday. And we know that we are heading for a fiscal deficit as a percentage of GDP this year based on the Saudi budget statement. How long do you think these kind of twin deficits can run before the FDI need becomes very acute or it becomes something that you're concerned about?
Yeah, I mean, there's still, a fair amount of runway. I mean, if you look at total external debt to GDP, it's still only around 33%. Yeah. It's still a AA rated country from Moody's. It has, great access to debt capital markets. So there is a runway, but obviously I think it's something that I'm sure that the government is watching closely because they want that trend in FDI to turn around, and you want to start seeing increasing confidence from foreign investors in order to sort of keep the lid on how quickly debt is going to start increasing if you're running these twin deficits.
Yeah, and we should give credit to Saudi where credit is due, because there's no one really out there saying that this economy is in bad shape or that there's any real reason to be concerned. When you look at the oil picture, clearly the economy has been trying to diversify, and we have seen that the non-oil sector and the oil sector are now almost mixed in terms of making up GDP growth. Mm-hmm. But how are oil prices playing out in your mind in terms of how important they are to the economy?
Yeah, I mean, I think, obviously more than just the prices, also the production. So, in 24, you had a drag on GDP due to production cuts. Hopefully that drag goes away in 25. We're seeing GDP, our estimates are GDP growing from about 1% in 24 to about 2.5% to 3% in 25, primarily due to the drop-off in the drag from production cuts. We see oil prices average around $73 a barrel in 25, well below the fiscal break-evens for the Saudi budget. So we're going to expect to see quite a bit of new issuance of Saudi debt in 25. But that's kind of where we see oil for 2025.
Yeah, and that's exactly where I wanted to go with the conversation next, was to ask you about what kind of issuance you are expecting from Saudi in 2025.
Yeah, so we had about $17 billion from the sovereign in 2024. We had another 9 or so from PIF, another 9 or so from Aramco. So you had around $36 billion from sovereign-related entities in 24. Total issuance in 24 from Saudi was around 80 billion. We would expect at least the same, if not more. So at least 35 to 40 billion from sovereign and GREs, and total issuance around 80 for the year in 25.
All right. Well, thanks so much for all of that insight. It's great to have you with us today. That's Abdul Kadir Hussain, Managing Director for Fixed Income Asset Management at Arqaam Capital. Well, Elon Musk's Starlink satellite network is expanding globally, with many governments removing obstacles now that Musk has taken on an even more prominent role, of course, at Donald Trump's side. Sources tell Bloomberg that Musk has been in talks with South African President Cyril Ramaphosa to discuss allowing Starlink's high-speed internet to operate legally there. For more on this, Bloomberg's Ondiro Oganga joins us now. Ondiro, thanks for joining us to talk about this really great story. What do we know about the conversations being had between Musk and South Africa about Starlink operating there?
Hi, Christine. So what we know so far is that President Cyril Ramaphosa and Elon Musk are having conversations around changing rules in South Africa to allow Starlink legal operation. And this was inspired by the fact that Starlink's appeal is fast growing. There's high unauthorized use to an extent that even the telecom regulator warned that there'll be a 270,000 USD fine for those who are found liable. The biggest hurdle to entering this market is the fact that there's a law in South Africa that requires companies to give 30% ownership to historically disadvantaged individuals. Now, Musk is hesitant because this is going to dilute the control of Starlink. So instead, relevant ministries in South Africa having conversations with regulators on how to allow foreign companies operate in South Africa in exchange for equity equivalent in terms of investment and job creation. We also know that President Ramaphosa is very, very keen on attracting Musk's businesses into South Africa, not just legal operation of Starlink, but also setting up of battery production facilities for Tesla. And like you mentioned in the intro, this softening of ground towards Elon Musk and his businesses can be largely attributed to the fact that now he has close proximity to Donald Trump and he has his ear. And that is why we are seeing jurisdictions being open to his businesses setting up base.
So walk us through the expansion that we may have already seen in Starlink, some of the hurdles that it's faced, and were you expected to see South Africa make any concessions in a bid to draw closer to Elon Musk and create a relationship that benefits South Africa?
The expansion of Starlink in Africa has been rapid. So far, they're in 16 countries, including Kenya, Ghana, Nigeria, Mozambique. And if we just focus on Kenya, take a county like Murang'a County. This is a rural county, 50 kilometers away from Nairobi. And they took advantage of a sale of Starlink kits in supermarkets. They have installed them in various health facilities across the county. And what Starlink has done across the region is they've been slashing prices, they've been boosting marketing, and also they've ensured there's quick distribution distribution and accessible distribution of these kits. You can shop for them while you're shopping for groceries in hypermarkets. And those who have them have attributed some advantages to it. First of all, it's easy to install. It's 27% cheaper than local internet providers. And it also offers almost 10 times more internet speed. However, there's been pushback from local internet providers like Safaricom, who say that companies like Starlink have to adhere to the same rules that local internet providers adhere to.
Ondiro, thanks so much for your insights. That's Bloomberg's Ondiro Oganga, who is with us from Kigali. Now for a look at some of the other stories that we are following today. U.S. President-elect Donald Trump has endorsed Speaker Mike Johnson, avoiding a potentially crippling leadership fight in the House. Johnson also earned the backing of Elon Musk, who has become a close advisor to Trump. The House is set to hold its vote for Speaker on January 3rd. Venezuela's top court has imposed a $10 million fine on TikTok over viral challenges that killed 3 children and injured dozens of people in recent months. It also ordered TikTok to establish an office in Venezuela. The judges say money from the fine will go toward a compensation fund for the victims. India's Adani Group is getting out of its consumer joint venture, Adani Wilmar, in a $2 billion multi-phased deal. An exchange filing shows Adani Enterprises will sell its 44% holding in stages to Singapore's Wilmar International. Adani plans to use the proceeds to bolster its core infrastructure business, including air transport and also renewable energy. Separately, the CEO of Adani Green Energy, Amit Singh, will step down at the end of March. That's as he assumes a new leadership role within the conglomerate. Singh will be replaced by Ashish Khanna, who currently leads the group's international energy business. Now, the change comes as the company faces U.S. allegations of offering bribes to get power contracts. And coming up, we talk about trade and tariffs next. This is Bloomberg. Stick with us. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Ahead of U.S. Inauguration Day on January 20th, businesses worldwide are rushing to prepare for potential tariffs and trade wars, leading to a surge in imports and supply chain disruptions. For more, let's bring in Bloomberg's news desk editor, Jill Deesis, who joins us from Hong Kong. Jill, so talk us through some of the problems that we're seeing. We talk about supply chain disruptions and other things that are happening. Explain it.
Sure, of course. So, look, I mean, at this point, what we've already seen from President-elect Trump are, various additional tariff threats pretty much across the world. I mean, we've already seen him, present quite a bit of disruption just a few weeks ago, saying that he wanted to increase tariffs on goods coming from Canada and Mexico, obviously, inciting, in the case of Canada, a bit of a flurry of a political crisis there when you had the finance minister step down. So there's some concerns there that you're looking at. And then, of course, this pretty much extends, worldwide when you look at how Trump has gotten involved in, cases like China, obviously, launching the trade war during his first term in office. And so, all of this kind of has a lot of businesses that are really kind of sitting here saying, look, we need to kind of hedge for the possibility that there could be some disruptions if there are increased levies on, goods, coming into the United States. And that's kind of, that kind of preparation in response to all of this ahead of when Trump actually comes in on January 20th.
So what kind of preparation are we seeing companies take already? I assume that they would have learned lessons from the last time around, and so we're seeing them preemptively take steps. What are those steps?
Yeah, I mean, a lot of that kind of involves, sort of gathering inventory, making, seeing if there's ways that they can diversify supply chains. Again, as you said, these are companies that have already been, trying to find other, avenues for setting up supply chain alternatives elsewhere. We saw a bit of this in China, for example, rather than having your entire manufacturing base centered out of, the world's second largest economy. Maybe they look toward areas like Southeast Asia, markets such as Vietnam or Thailand or what have you to kind of diversify supply chains there. We certainly have seen, some of those efforts. Again, all of this really does come down to this idea that, we're preparing for a world in which, you've got leaders coming in like President-elect Trump who are much more protectionist in nature. And so, that does kind of involve, different ways that you can, maybe bring some of your manufacturing bases on, onshore in the United States, for example, or maybe diversify again elsewhere, trying to make sure that you don't have all of your eggs in one basket in the event that there are, particular tariffs that really hit your business very hard.
What happens in the event that we don't actually see these tariffs? I think that the wide expectation is that we will, but if these companies are doing all this front loading of orders, building this inventory, and then we don't ultimately see this, is it still a positive for supply chain diversification?
I mean, ultimately, we have been seeing supply chains kind of diversify anyway. I mean, you do, again, it's this idea of sort of building a hedge. I think you can imagine that, again, with this Trump administration, maybe you don't necessarily see something to the, tune of 60% tariffs on Chinese goods that he kind of brought up during his campaign. Bloomberg Economics actually just a couple of weeks ago kind of did, some big number crunching on how the, percentage of tariffs may not be necessarily the most likely outcome here. But still, you can't imagine that there's a world in which, you do have certain regulations that, that President-elect Trump, that is incoming, U.S. trade, representative kind of bring into the equation that do, make things, for there to be that potential for some extra squeeze. So, yeah, I mean, obviously, any kind of preparation like that, there's, potentially some benefit there. But again, it's just that matter of sort of creating hedges in the event that you do have, some of these difficulties with, additional levies that could be coming into place.
Yeah, and I guess we'll learn a lot more soon as we get ever closer to that January 20th inauguration date. That's Bloomberg's news desk editor, Jill Desis. Now for a look at some of the other stories that we are following. Senegal's economic growth rate surged to a record in the third quarter as the West African nation began exporting oil. GDP jumped almost 9% from the previous quarter and 11.5% year on year. The economy is expected to grow further when Senegal begins exporting gas next year. The IMF expects growth of 9.3% in 2025. The expansion provides Senegal with an opportunity to fix public finances, including a forecast budget shortfall of more than 11% of GDP. State-owned Nigeria National Petroleum says its second refinery in the southern city of Warri is now running. It provides a major boost to a country which is seeking to wean itself from expensive fuel imports. The group CEO says the 125,000 barrel a day refinery is up and running, but only at 60% capacity, and it will focus on producing straight-run kerosene, diesel, and naphtha. And coming up next, hear why New Century Advisors says traders and the Fed can't take U.S. labor market resilience for granted. We hear more from Chief Economist Claudia Sahm next. This is Bloomberg.
If we could keep it as it is right now, largely, this would be another great year ahead of us. We've been surprised at how well the past 2 years have gone, particularly when you think about growth and how the consumers have held up. But that doesn't have to keep going. So what we really want people to focus on are the blind spots, right? What could go wrong? Who isn't getting enough attention? And I think one area, if I had to maybe point some Fed officials to a blind spot, I think they showed a lot of complacency in their last summary of economic projections on how well the labor market would continue to hold up. What we saw them kind of write down, the typical official, was something that basically has the unemployment rate sticking about where it is right now for the next 3 years. That's a pretty remarkable and frankly would be very unusual path to the labor market. And yet there was all kinds of concerns about inflation and the uncertainty around inflation. But I think I'm still concerned that there are things in the labor market, while good, don't quite look like sustainable. And that's where the problems can come in, and so that's one area that I think is still worth watching.
So if I ask which is a bigger risk, a weakening labor market or a stubborn inflation, you're going with the former rather than the latter.
Inflation's fine right now. I mean, we are really not that far from 2%, and we've seen a lot of encouraging signs under the hood that we are getting to this last mile on inflation.
But right now,
the labor
that's
market
before tariffs. That's before we deport millions of workers. That's before Donald Trump comes into office. So things could change drastically after January 20th.
Absolutely. They could change drastically. And I think it's appropriate that we have had a very deep conversation about the policies that have been put on the table. And there have been a lot of policies put on the table. And it's really important to have this conversation and talk about some of their potential pitfalls. And maybe we won't see all of them put into place. And that probably would be a good thing for the economy. And yet, kind of taking for granted the good stuff that we've got going in the economy that's a little more nuts and bolts, like the labor market functioning, and just saying, oh, well, that'll just keep going. That's all fine. It's in a good place. I think that's that could be a real mistake in terms of, because the labor market in particular is always and has been the past few years such a linchpin to this amazing period of a big disinflation, growth has stayed strong, and unemployment has stayed relatively low. And that's something we want to keep going.
That was New Century Advisors Chief Economist Claudia Sahm speaking with our colleague Matt Miller. Well, that's it for the first hour of Horizons Middle East and Africa. Stick with us. I'm Christine Berg in Dubai. This is Horizons Middle East and Africa. Our top stories this morning. The U.S. Treasury says it's been hacked by a Chinese state-sponsored actor through a third-party software vendor. Syria reportedly appoints the country's first female governor to head its central bank. She faces the challenge of enabling growth while stabilizing the currency and foreign exchange reserves. And South Korea issues an arrest warrant for impeached President Yoon which his lawyers claim is illegal. Well, good morning. It's just gone at 9 a.m. across the Emirates. I'm Christine Berg in Dubai.
And I'm Lizzie Burden in London, where it's just gone 5 a.m. Welcome to the second hour of Horizons Middle East and Africa. Good to be back with you, Christine.
Yeah, same to you, Lizzie. Good to see you, and especially on New Year's Eve heading into 2025. And again, here we are, the final trading day of 2024. And it does look like we are going to end the year with stocks under pressure and markets more broadly under a lot of pressure as well. We had losses across Wall Street, again, led by the big tech space. S&P 500 futures and NASDAQ, or S&P 500 benchmark and the NASDAQ benchmark yesterday were down by more than 1%. The S&P has now fallen for 3 straight sessions, and we are heading for the worst monthly performance since April. But even when we consider the losses that we've seen over the last couple of days, it hasn't done much to dent the S&P's rally over the course of 2024. We are still heading for gains of well over 20%. So perhaps what we are seeing is just some thin volumes in the market, exacerbating price moves, and also as traders pause to take stock of everything that we have been seeing. Now, the U.S. dollar there, we're seeing a little bit of weakness today, but it's still heading for the best year since 2015. And I wanted to put natural gas up for you here because we have seen a pretty significant rally over the course of the past 2 days. We are seeing futures soar on a weather outlook for January and February, which some are calling a potential Arctic blast that could draw down stockpiles and give a little bit of a boost to natural gas markets, which is clearly what we are seeing. Now, here is another commodity I would like to talk about. If we have time, we're going to look at cocoa futures because we've seen a big run up in cocoa futures recently too. But let's forget cocoa futures actually for a moment. We just note that we've seen a big gain there. Maybe we'll talk a bit about that more in the show. But Treasury yields here. Yesterday we saw the Treasury market see a little bit of a reprieve in the recent sell-off. That drew down at 10-year yields just a little bit, but we are still seeing a 5-year and a 10-year yields that are trading around very elevated levels, some of the highest levels across 2024. So something to consider as we finish out the year and think about where Treasury yields go in 2025. Well, the U.S. Treasury says it's been hacked by a Chinese state-sponsored actor through a third-party software vendor. It's the latest in a recent string of breaches that have affected U.S. telecommunication systems. For more, News Desk editor Jill Desis joins us now. So, Jill, walk us through what we know about this breach.
Yes, so from what we've found out so far, it sounds like the Treasury Department was notified on December 8th by this third-party vendor that's Beyond Trust that some of these systems had been compromised. Beyond Trust is a company that holds about $4 million worth of contracts with the federal government. What they're saying is that these hackers apparently gained access to certain Treasury workstations and unclassified documents. They said unclassified documents were gained access to. That has those compromised services have been taken offline. There's no evidence that these hackers have continued access to any of these, any of these services. But what the U.S. Treasury Department is saying is that the hackers were sponsored by the Chinese, the Chinese state-sponsored actors. Of course, as of right now, China is essentially calling this a smear campaign and sort of denying involvement in that way. Yes, so again, still getting some details there, but that's at least what we've heard from the Treasury Department so far, that this has been taken offline at this point.
What's the potential fallout here for U.S.-China, already a tense relationship?
Yeah, I mean, at this point, again, you're seeing a little bit of that flare-up in tensions when you get a response like that from the Chinese government. Of course, with President-elect Donald Trump coming in on January 20th, you do have, the potential for those tensions to sort of become even more exacerbated. We saw that a bit, obviously, during, the first Trump administration with the launch of that trade war. We've had, that kind of tension sort of unfold there. But really, I mean, U.S.-China relations have just, gotten, pretty, significantly worse. You're seeing sort of a bipartisan anti-China sentiment in Washington right now. So from both Republicans and Democrats, we did see that worsen quite a bit, actually, during the Biden administration with some, additional regulations and other restrictions that the U.S. was kind of pushing on China as a pressure campaign. So it's, something that does kind of threaten to exacerbate tensions ahead of Trump's inauguration next month.
Have we heard anything from the U.S. that specifically indicates action that they could take in response to this?
So at this point, the U.S. could potentially do something, but I think they kind of want to, keep things, somewhat close to their chests. We did, we've reached out to the Department of Defense, Department of Justice, some others, asking for comment about this particular hack. I will say that this is also, though, kind of a part of a larger cyber espionage campaign against U.S. telecommunications companies by Chinese state sponsors hackers. We've heard the White House say that they want to plan further actions to hold China accountable. But again, you're kind of in a transition at the moment when you've got a brand new administration that's coming in just about 20 days from now. So I think at this point, we're just going to have to see, what happens, obviously, as we get into the new year and whether there's any of that further action that actually does come to fruition.
So much to watch. That's Bloomberg's Jill Desis. Thanks for all of that. Now, for a look at some of the other stories that we are tracking this morning. Multiple media reports say Syria will appoint Maysa Sabrine as the new central bank governor. She would become the first woman to ever run the bank. Sabrine previously served as first deputy governor under the fallen Assad regime. The central bank faces the enormous challenge of stabilizing Syria's currency and foreign exchange reserves while setting policies to enable growth. And in Israel, the Tel Aviv Stock Exchange is planning to move its trading days to Monday to Friday from its current operating week of Sunday to Thursday. The change will happen in early 2026, and trading will end at 2 p.m. on Fridays in order to allow for Sabbath observance. The finance minister says it will align Israel with other global capital markets and strengthen its connection to the world.
Well, in other news today, lawyers for South Korea's impeached President Yoon Suk-yeol say that a warrant issued for his arrest is illegal. The warrant came after Yoon repeatedly defied investigators' requests to face questions over his martial law declaration earlier this month. We can get more now with Bloomberg's Bill Ferries. Bill, good morning to you. I wonder, surely a lot of this depends on whether Yoon is going to be taken into custody, whether they can find him. It seems difficult, clearly, if his lawyers saying that the warrant is illegal.
have a week to enforce warrants. It's not really clear what the timeline is for this particular warrant, given the political sensitivities. But that will be a real indication of where things are headed if they are able to take him into custody, or if he's able to stonewall. He has so far refused on 3 occasions to answer questions about his decision to call martial law and the events that took place after that. And his staff effectively blocked a search of the presidential office as well. So it's really uncharted territory for South Korea. If President Yoon is arrested, he would be the first president arrested in South Korea's history.
And we had been told that politics was kind of suspended because of the mourning for the plane crash, the Jeju Air accident, of course. What's the latest on the investigation there, Bill? It seems that that kind of moratorium on politics seems to have been lifted.
Yeah, I don't think that moratorium is going to last very long. That political truce is probably coming up to its expiration soon. In terms of the probe of the crash itself, there have been some delays in terms of technically analyzing one of the black boxes that was recovered in the aftermath of that crash. There has been a second black box recovered, and investigators do have the voice recorders, which will illuminate what was going on inside the cockpit, including any noises or disturbances that took place in the moments before that accident took place. But right now there is a bit of a political truce, but with this warrant coming out, the big question is whether whether investigators are able to enforce it and take Yoon in. South Korea really in a very unusual and unforeseen place right now, with its third leader now. Finance Minister Choi is the third head of South Korea's government just in the last 3 weeks.
And Bill, of course, Korean markets closed today, but Asian stocks set for a quarterly loss as the year ends. How's all that political uncertainty weighed on Korean markets in 2024?
Well, we think we're already seeing a bit of an impact from it. The won is the worst performing major currency this month in the world, and we did see a tick up in the December inflation gauge, partly as a result of that. You have the finance minister, who is now the effective president of the country, overseeing the economy, overseeing this political crisis, and overseeing the probe into what happened with this airline crash. So quite a bit on his plate. It remains to be seen whether he's able to juggle all that and the crisis that might follow if the President Yoon is taken into custody.
OK, well, we'll keep an eye out for whether that arrest warrant will be successful. Bloomberg's Bill Ferries, we thank you as we track Korean politics into 2025. Now, for a look at some of the other stories we're following this morning, US President-elect Donald Trump has endorsed Speaker Mike Johnson, avoiding a potentially crippling leadership fight in the House. Johnson also earned the backing of Elon Musk, who's become a close advisor to Trump. The House is set to hold its vote for Speaker on January the 3rd. Elsewhere, US stock markets will close on January the 9th to observe a national day of mourning for former President Jimmy Carter. The closures are part of a long-standing American tradition in which financial institutions halt operations following the death of a president. Carter died on December the 29th at the age of 100 and was the longest-living US president in history. And Venezuela's top court has imposed a $10 million fine on TikTok over viral challenges that killed 3 children and injured dozens of people in recent months. It also ordered TikTok to establish an office in Venezuela. The judges say money from the fine will go towards a compensation fund for victims. And India's Adani Group is getting out of its consumer joint venture Adani Wilmar in a $2 billion multi-phase deal. An exchange filing shows Adani Enterprises will sell its 44% holding in stages to Singapore's Wilmar International. Adani plans to use the proceeds to bolster its core infrastructure business, including air transport and renewable energy. Those are some of our top stories this morning. Still ahead, hear why Lighthouse Canton is overweight on China. That's coming up next on Horizons. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Asian shares are struggling for direction on the last trading day of 2024 after a weak showing on Wall Street, with some markets already shut and others closing early. Joining us is Sunil Garg, Managing Director and Global Head of Research and Investments in Dubai at Lighthouse, Canton. So, Sunil, we were just commenting on how you expect a quiet end to the year, and then you see what we are seeing in markets, where there has been broad-based declines for U.S. equities, a sell-off for big tech. Is this down to thin trading volumes, portfolio rebalancing, or is this down to some sort of fundamental shift or change in sentiment toward where we head after a big year for equities in the States?
I think, you may have liquidity and thinning volumes playing a part. But really, you've got to look at, first of all, the participation in the market is very narrow. To give you a statistic, only a third of S&P 500 stocks are above their 50-day moving average, which is at its lowest in 2024. So you're really seeing a very narrow participation. And you've got upcoming risks. You've got the inauguration coming up. You've got fourth quarter earnings coming up. And I think a lot of uncertainty and possibly disappointments ahead.
And looking at your global outlook, one of the things that's interesting to me is you mentioned concerns around growth. A lot of what we've been talking about on the show in the last week or so hasn't really been about growth, but more so around inflation. Yeah. So talk to me about the concerns that you have around that.
Yeah, see, inflation kind of went off the headlines. It's come back in focus, and suddenly the Fed's on a bit of a pause. But I think, if you, again, look at the details, the labor market has been softening, the housing market has been softening, and there will come a tipping point where you will see growth suddenly becoming a concern. And I think at that point, we'll shift the focus back. And I suspect this is not a first half, second half discussion. I think the first part of it is a shorter phase, and we'll be back to growth concerns. You probably will end up with us discussing more rate cuts than the two the Fed is penciling in right now. I know it's controversial, but that's where we think it goes.
That suggests that we should expect some volatility in Fed messaging then, right?
Absolutely. And I mean, look, 2024, there's been huge volatility in the Fed messaging. We started the year with 6-7 rate cut expectations, and then 2 much lower, ended up with 4. We will probably see more volatility. And to be fair, the Fed needs to react to data, right? At the moment, the data is not showing growth concerns, but our expectation is it will.
And the Treasuries market has had a remarkable year as well. And when I say remarkable, I mean that we aren't really seeing any gains at all in a year where potentially it should have been the opposite case. And that's so much down to Fed policy. And now we've also, since the election of Donald Trump, of course, have fiscal risks and policy coming into play. Do you have views on the Treasuries market where we go from here? Are we in a danger zone already with yields, as some have said?
Yeah, I mean, look, I think we've seen a massive move up, like about 100 basis points since the lows in September when the Fed started cutting. I think the short-term risks are there, but if our view on growth concerns re-emerging is correct, then there will essentially be supportive for Treasuries. It's just that I wouldn't go and rush to buy Treasuries today, but they've already seen a very large part of the move factoring in the fact that growth's been strong and some of the risks from the new administration.
And if we look over to Asia, China's another place where there's a lot of uncertainty for 2025. Questions around what will be the stimulus that ultimately gets rolled out to the market. What are your expectations for what we ultimately do see?
So, I mean, first up, we like China. And I think all, market watchers, Western watchers in particular, are looking at a helicopter money solution. They're probably not going to do that. They're focused on a much slower balance sheet repair opportunity. And we think that's a much more sustainable path. We like domestic consumption. It's going to be volatile. So, there isn't going to be a silver bullet coming out of it. But I think the domestic consumption metrics will improve, and you will see progressive stimulus. It's just not going to be a big bang.
And India is another place where you mentioned you seem quite bullish on this. Talk to us about your views.
Not very bullish in the short term, I have to say.
My mistake then. Okay, so explain.
Earnings growth is probably going to be low single digits this year, in the current financial year. Now, the market, for some reason, expects 18-20% growth, revival in the 25-26 period, which I think is going to be a disappointment as well. If you look at some of the recent economic data, the overall economic growth has been somewhat disappointing. So in a sense, this market has been trading on very expensive valuations, as has the US been as well. But if you don't get to the earnings expectations, then there is a softness around, right? So I think we like India long term, great structural story. Again, this is not a market where I would go rush to buy it. In the EM space, I would rather be in China than in India today.
All right, so China rather than India. Very
As of
interesting.
today.
Thanks so much for all of your insights. We'll have to see how all of that plays out, and we'll hope to see you again soon.
Thank you.
That's Sunil Garg, Managing Director, Global Head of Research and Investments at Dubai at Lighthouse, Canton. Well, let's take a look at what is going on with the Bitcoin market. Now, I wanted to draw your attention to the fact that we are actually seeing some gains for Bitcoin today, because it's often viewed as a proxy for risk. And as we are seeing weakness in markets more broadly, Bitcoin is actually trading a bit higher today, around $92,000. Of course, that's well off the highs of $108,000 that we saw just a couple of weeks ago, but still a risky asset that is moving higher in a risk-off day. And coming up, China's factory activity expanded for a third straight month in December. We have the latest on what this means for the health of the Chinese economy next. This is Bloomberg.
Welcome back to China now, where factory activity expanded for a third straight month in December to 50.1, bolstering expectations the economy will reach its annual growth target after Beijing's stimulus blitz. Let's get analysis now with our China correspondent Min Min Lo, who joins us from Hong Kong. Min Min, good morning. I wonder what stood out to you from the data, because for manufacturing missed expectations, but is it still encouraging?
Hey, Lizzie, I think what really stood out to me was the big surprise when it comes to the non-manufacturing PMI, which was a big beat at 52.2. It's the strongest print we have seen since March, and that is bolstered by improvements in both the services PMI and a big bounce in construction PMI, which came in at 53.2 versus a contraction of 49.7 the previous month. Now, the National Bureau of Statistics is saying that this is because companies are speeding up construction ahead of the Lunar New Year's holiday, but some analysts are saying it also could be because of the infrastructure-related fiscal spending taking hold in the month of December as well. But if you look at the manufacturing PMI softening to 50.1, the previous month's print was 50.3. This is partly because of seasonal factors, and if you look at the sub-gauges there, you can see that output prices continuing to contract to 46.7. That tells us that we still see a little bit of that overcapacity in the manufacturing sector. The employment gauge as well continuing to contract 48.1. And if you look at the non-manufacturing PMI employment sub-index as well, that's hovering around 45. So that tells us that businesses in general are still very pessimistic about hiring, which really doesn't bode well for people's confidence around their income growth, their employment prospects. So again, this is that story of weak domestic demand that is taking hold in the economy that's offset by the resilience of overseas demand.
And just very, very briefly here, Min Min, how's the performance of Chinese equities been in 2024? Good, bad, ugly?
Well, pretty mixed, but overall at the end of the year, Chinese stocks really ended the year higher, outperforming the broader Asian benchmark, and it's really bolstered by the September stimulus blitz that really pushed those stocks higher, even though we gave up some of the gains towards the end of the year. Still, if you look at the CSI 300, best year since 2020, HSI best year since 2017, bolstered by that 19% gain in September.
Better than good. All right, Bloomberg's China correspondent Min Min Lo, good to have you with us. Thank you. We're going to go to Saudi Arabia next. Inflows of FDI slumping in the third quarter. We'll get more on the challenges for the economy next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. The US Treasury says it's been hacked by a Chinese state-sponsored actor through a third-party software vendor. Syria reportedly appoints the country's first female governor to head its central bank. She faces the challenge of enabling growth while stabilising the currency and foreign exchange reserves. Plus, South Korea issues an arrest warrant for impeached President Yoon Suk-yeol, which his lawyers claim is illegal. It's just gone 5:30 a.m. in the UK. I'm Lizzie Burden, joining you from London.
And I'm Christine Burke in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa.
A very good morning to you, Christine. And it is, of course, the last day of 2024. It's been a stellar year for equities, it has to be said, but these are thin volumes. You've got futures stateside pointing a touch lower this morning. Just to note, it is a full day for stocks, but US Treasuries close early. In terms of the dollar, we are looking at it, again, a touch weaker today, but again, it's been the greenback's best year in nearly a decade. And we have been looking at natural gas futures. They're much higher as we brace for a cold snap in January. I have to say, Christine, very disappointedly here in the UK, it looks like Hogmanay is going to be closed in Edinburgh because it'll be so chilly. But the weaker, colder temperatures weighing, pushing up natural gas prices for the futures. But if we just zoom in next on gold, it's steady today, but really interesting across the year. And if we look at this chart, you can see it's up 26% in 2024. Its best year since 2010. It beat global stocks by more than 10%, but that's not really been uncommon over the past decade. And then as we think about 2025, we need to wonder, is that going to continue? And really, it's going to take various factors to stay in place, like the threat of inflation returning, like all the geopolitical risks. So one to keep an eye on in the new year. But sticking with that theme of uncertainty, it's of course one that hangs across over the question of global trade. And ahead of US Inauguration Day on January the 20th, businesses worldwide are rushing to prepare for potential tariffs and trade wars, and that is leading into a surge in imports and supply chain disruptions. The mere threat of universal tariffs is sparking a scramble that's leaving the global trading system prone to bottlenecks, saddled with higher costs and vulnerable to disruptions should an economic shock come along. Let's get more now with Bloomberg News' desk editor Jill Desis in Hong Kong. Jill, this has been the subject of a fantastic big take on the terminal. Just tell us more about how companies are preparing for the unknown effects of Donald Trump's second administration on trade.
Yes, well, Lizzie, as we've seen really over the past several weeks here, there's obviously an incredible amount of uncertainty about what Trump could do once he returns to office. We've already seen him really kind of shake things up with various tariff threats on places like Canada and Mexico. So this isn't just something that ultimately threatens to perhaps incite further developments in the U.S.-China trade war, but really something that could actually impact U.S. allies as well. So we've been talking to companies really around the world about various efforts that they're really taking to try to shore up supplies ahead of then. You're seeing a lot of companies kind of front load orders. First off, that's kind of actually translating through in a lot of the data that we're getting from, various, container ports. Shanghai, for example, throughput's up, something like 30% recently. You're also seeing a lot of businesses take efforts to, try to find new suppliers if they're worried that their existing suppliers might be impacted by new tariffs. Or if they can't do that, then they're trying to renegotiate some of the terms they have with those existing suppliers. Aside from that, I mean, this really does just come down to, a lot of these companies sort of bracing for the possibility that they may have to raise prices and ultimately pass those prices on to the consumer if some of these tariff threats actually take place.
But I suppose the big question is, what if the strategies that help businesses the first time round don't work the second time round? And where you mentioned the ports, can they actually handle all of these rushes to get business through?
Yeah, I mean, that certainly is the big question here. I think that, at least in part, part of this, sort of front loading is, kind of in an effort to get ahead of that, try to escape some of the bottlenecks that may ultimately result. Obviously, though, there's, not a whole lot that's entirely certain about what these tariff threats could actually manifest themselves as. I mean, you had Trump during his presidential campaign ultimately threaten something like, 60% tariffs on Chinese goods. Sometimes when Trump makes a threat, it's something that may ultimately translate into, something else that feels a little bit different in practice, depending on the types of goods that are being impacted, depending on, what various other regulations that kind of come into effect. So, the one thing is that while you do have, all of these different types of companies sort of the world over try to figure out the ways that they can ultimately hedge themselves against this, they have some familiarity with Trump because, he's already served a term in office. So you did already have, some companies, for example, sort of shift supply chains out of China, try to diversify where exactly they were setting up shop and where they were getting their suppliers so that they didn't have all of their eggs in one basket. But, until Trump actually takes office and we get a better idea for what that administration is going to do, it's, it's really tough to say.
I liked our colleague Brendan Murray's observation that if Trump's favourite word is tariff, business's least favourite word is uncertainty. Bloomberg News Desk Editor Jill Deeses, we thank you, as always, on that big take.
Well, here in the region now, the Saudi investment minister plans to quadruple foreign investment into the kingdom by 2030. Khalid Al-Falih spoke to Bloomberg TV on the sidelines of the Future Investment Initiative Conference in Riyadh at the end of October. Take a listen.
Gets $26 billion, which is the 96 billion riyals I was talking about. So ahead of target, the national investment strategy assumed that we will have a steep but manageable climb towards 2030, where the target is about $100 billion in 2030. So today we're about 4x. If you normalize for fluctuation, we're about 4x where we were before the vision started. And we need to quadruple that still to get to our target 2030. Ahead of the annual target, but not nearly where we want to be at 2030. But the reason I feel optimistic is that all the leading indicators are pointing upwards. All lights are flashing green. Investor licenses are at an all-time high. We have 10 times the international investors we had before the vision. And they are forecasting deployment of significant amount of capital. All the sectors are attracting a lot of attention. Our capital markets are growing well. We're issuing a lot of IPOs, so international investors are seeing that they have an exit, they can monetize.
I just got off a panel now talking about the state of the global economy, and one of the big themes that is coming up is this concept of geo-economic fragmentation, further trade barriers being put up around the world, talk of further tariffs should President Trump return to the White House. How do you account for the possibility of further trade barriers being introduced in the future, and obviously the invariable impact that that's going to have on FDI flows internationally?
No, I think global trade will continue in a big way, but global supply chains and who you trade with will shift somewhat, but I wouldn't over-dramatize it because the interdependency between people on the planet, and we've just crossed 8 billion people, everybody needs to be fed. We experimented a little bit during COVID and the Russia-Ukraine war with the disruptions in global supply chain, and nobody liked it. People couldn't get their food, manufacturing in some countries stopped because parts were not coming. So I think we're coming to the reality that we need more resilience and more trade, not less. I think there is a reconfiguring of global supply chain and therefore global trade to regionalize some of it, certainly to green a lot of it and to decarbonize, and to introduce technology across the board and to go to regions that are growing where there is a population that is vibrant, well-educated, and there are companies that are invest, and the business environment is transparent, pro-private sector. All of those factors, Jumana, are right here in the kingdom.
Investment minister, he sounded a bit optimistic about FDI inflows into the country, but inflows of foreign direct investment actually slumped in the third quarter, and a sign that we continue to see Saudi Arabia face challenges in drawing external capital to back its economic overhaul, of course known as Vision 2030. Official figures show FDI inflows dropped 8% quarter on quarter, and we also got a drop year on year. Let's now bring in Laura Gardner-Cuesta, who joins us now and is our Bloomberg Middle East Equity Capital Markets reporter. So, Laura, we were looking at the story yesterday. We've been talking about FDI over the past 24 hours quite a bit. What did we see from the data, and what does that tell us about Saudi ambitions to draw in foreign investment?
So, Saudi's Vision 2030 hinges very importantly on FDI. It's one of the key pillars for them to raise cash. And as you said, the ministers sounded very optimistic. They've set themselves key targets of 100 billion FDI annually by 2030. But looking at the data for the third quarter, we see that this is being quite slow to materialize. And we've seen this over the past few quarters. And the third quarter data shows, like you said, a drop year on year, quarter on quarter. And if we look at what they've raised so far this year, they're basically halfway, what they've attracted so far this year, they're halfway where they need to be to reach their $29 billion goal. So this means that a lot is hinging on the fourth quarter. They would need to essentially attract as much as they have in the first 9 months. So it looks like a pretty steep target at this stage.
Yeah, and Khalid Al-Falih did mention that they do have a steep hill to climb to reach that $100 billion. So it's not as if the government doesn't know what they are up against. When we look into the current quarter that we are in, we had FII in October, which was a big investment conference. What have we seen over the past few months that indicates potentially whether we do get that big quarter for FDI?
Yeah, absolutely. And I think the minister as well, he mentioned there's like some green shoots, and we've definitely seen a few announcements coming out of FII. We saw Z Capital, which is a New York-based bank, say that they're planning to invest $2 billion in the Saudi economy, $2 billion. And we've also had Goldman Sachs said they were going to open a new office in Riyadh, and Bloomberg News has exclusively reported that they're looking at opening a potential Middle East-focused fund. So there's definitely some indications that there will be more FDI, but again, it's a very steep hill to climb, and we'll have to see where we end up with the year.
Yeah, definitely. And just a quick final question for you here. How much of this investment actually comes to fruition? I mean, we see these deals talked about, then what?
Exactly. I think, look, these deals take time, and I think it's fair to say that these are very big investment deals. It takes time to negotiate, agree, and then implement, because you have to find the projects that you're going to actually invest in. This, like, no one is saying that this is like an immediate thing, but the reality is we do see a lot of these announcements, and we're not too clear when they actually get implemented. So we'll have to see as we go along.
Yeah, well, all we know is that they need a big fourth quarter, so let's see indeed. That's Laura Gardner-Cuesta, Bloomberg's Middle East Equity Capital Markets reporter. Well, coming up, Elon Musk is looking for policy changes in South Africa to expand his Starlink satellite network. We have all of the details on that story next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, not a day goes by, it seems, where we're not discussing Elon Musk as his political influence grows. He, of course, has particular relevance for our region, having been born in South Africa. He left as a teenager, and now he wants something from President Cyril Ramaphosa, dilution of a local black ownership requirement for his Starlink satellite network. Let's dive into this now with our correspondent, Ondiro Oganga, who's in Kigali, Rwanda. Good morning, Ondiro. What do we know about what Musk's offering in exchange for this access?
Hi, Lizzie. So what we know so far is that President Cyril Ramaphosa and Elon Musk are having conversations to change rules to allow Starlink to legally operate in South Africa. And this is because the appeal of Starlink has grown so fast in the country that unauthorized use has skyrocketed to an extent that the telecom regulator in the country warned of fines of up to $270,000 USD for those who are found liable of using Starlink. And, you know, Starlink is very hesitant to comply with the black ownership law that you mentioned earlier on that requires that 30% of company ownership goes to historically disadvantaged individuals. This is going to dilute their control. So instead, relevant ministries in South Africa are having conversations with regulators to allow foreign companies like SpaceX and Starlink to operate in the country in exchange for equity equivalent in terms of investment and jobs. And President Cyril Ramaphosa is very keen on attracting Elon Musk's businesses. So aside from Starlink, they're also hoping to set up battery production for Tesla in South Africa.
OK, that's interesting. But walk us through so far the expansion of Starlink in Africa and kind of the hurdles that Elon Musk's faced.
Well, the expansion has been very rapid. Starlink is now available in 16 countries on the African continent, including Mozambique, Nigeria, Kenya, and Ghana. And if we look at Kenya, it's now accessible in rural counties where these county governments are taking advantage of Starlink kids and hooking them up in health center facilities. And Starlink has been very aggressive in their marketing. They've been slashing prices, they've been boosting marketing, and the distribution chain is really, really vast. Kenyans can now get Starlink kits while shopping for groceries. And those who've used it have cited several advantages. It's easy to install. It's 27% cheaper than local internet providers, and it also offers 10 times more speed. However, there's been pushback from local network providers like Safaricom in Kenya, who says that if Starlink is to operate in the market, then they have to be held at the same standard and adhere to the same rules that local providers have to play by.
You kind of wonder whether you'll see more resistance to Starlink worldwide crumbling after Elon Musk gets into office along with Donald Trump in January. Ondiro Oganga, we thank you for that analysis from Kigali, Rwanda.
Now for a look at some of the other stories that we're following. Senegal's economic growth rate surged to a record in the third quarter as the West African nation began exporting oil. GDP jumped almost 9% from the previous quarter and 11.5% year on year. The economy is expected to grow further when Senegal begins exporting gas next year. The IMF expects growth of 9.3% in 2025. The expansion provides Senegal with an opportunity to fix public finances, including a forecast budget shortfall of more than 11% of GDP. State-owned Nigeria National Petroleum says its second refinery in the southern city of Warri is now running. It provides a major boost to a country which is seeking to wean itself from expensive fuel imports. The group CEO says the 125,000 barrel a day refinery is up and running, but only at 60% capacity, and it will focus on producing straight-run kerosene, diesel, and naphtha. Now, the plant has been under rehabilitation since 2021 at a cost of $898 million. The UK has rejected a report that a deal struck with Mauritius to cede sovereignty of the Chagos Islands while retaining control of a key military base could cost Britain $1 billion a year or more. Prime Minister Keir Starmer struck a deal with the previous Mauritian government in October to secure the US-UK base on the island of Diego Garcia for 99 years. However, the current Prime Minister Ramgoolam has since tried to reopen the deal, with his administration saying the pact, quote, would not produce the benefits that the nation expect. And coming up, we hear why New Century Advisors says traders and the Fed cannot take U.S. labor market resilience for granted. We'll get to the details and the views from Chief Economist Claudia Sahm next. This is Bloomberg.
If we could keep it as it is right now, largely, this would be another great year ahead of us. You know, we've been surprised at how well the past 2 years have gone, particularly when you think about growth and how the consumers have held up. But that doesn't have to keep going. So what we really want people to focus on are the blind spots, right? What could go wrong? Who isn't getting enough attention? And I think one area, you know, if I had to maybe point some Fed officials to a blind spot, I think, you know, they showed a lot of complacency in their last summary of economic projections on how well the labor market would continue to hold up. You know, what we saw them kind of write down, the typical official, was something that basically has the unemployment rate sticking about where it is right now for the next 3 years. That's a pretty remarkable and frankly would be very unusual path to the labor market. And yet there was all kinds of concerns about inflation and the uncertainty around inflation. But I think I'm still concerned that there are things in the labor market, while good, don't quite look like sustainable. And that's where the problems can come in, and so that's one area that I think is still worth watching.
So if I ask which is a bigger risk, a weakening labor market or a stubborn inflation, you're going with the former rather than the latter.
Inflation's fine right now. I mean, we are really not that far from 2%, and we've seen a lot of encouraging signs under the hood that we are getting to this last mile on inflation.
But right now,
the labor
that's
market
before tariffs. That's before we deport millions of workers. That's before Donald Trump comes into office. So things could change drastically after January 20th.
Absolutely. They could change drastically. And I think it's appropriate that we have had a very deep conversation about the policies that have been put on the table. And there have been a lot of policies put on the table. And it's really important to have this conversation and talk about some of their potential pitfalls. And maybe we won't see all of them put into place. And that probably would be a good thing for the economy. And yet, you know, kind of taking for granted the good stuff that we've got going in the economy that's a little more nuts and bolts, like the labor market functioning, and just saying, oh, well, that'll just keep going. That's all fine. It's in a good place. I think that's that could be a real mistake in terms of, because the labor market in particular is always and has been the past few years such a linchpin to this amazing period of a big disinflation, growth has stayed strong, and unemployment has stayed relatively low. You know, and that's something we want to keep going.
That was New Century Advisors Chief Economist Claudia Sahm. And that is it for Horizon's Middle East and Africa. I'm Christine Burke in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.